Before I go to the few points that I've prepared to share, let me just pose this question to you, the audience. If you have 1,000 US dollars, what will you do with it? 1,000 US dollars, what will you do with it? Maybe consume? You'll just maybe buy something. Or maybe you will invest. But what if you have 10,000 US dollars? What will you do with it? Again, some might consume, some might invest. Now let us look at another figure. What if you have 100,000 US dollars? What will you do with it? I'm told some will consume it. Buy things for big houses perhaps, or more houses, or more cars, good furnitures. I'm told maybe add another wife. Of course, others will invest. Now what if you have a million US dollars? You have $1 million US dollars, what will you do with it?
You'll actually 3 wives.
You keep on adding another wife. That is consumption. That's the consumption pattern. Now, sometimes that is the puzzle people have. And it could be because they don't know where to invest that money. So rather than looking at it sitting in a bank account, they have to find something to do with it. So that is, and of course sometimes it's because people are not aware of where to invest. So this brings one of the essential instruments that can be used for investment, which are called investment funds. And in my topic I will be sharing with you on Islamic investment funds, because for some of us are quite familiar with conventional investment funds. And for the case of Tanzania, those who are coming from Tanzania, or those who are here in Tanzania, you might know UTTs. Do you?
Yes.
Unit trust funds, where you have Umoja, Wekeza Maisha, bond funds. There are almost 5 funds. Now the challenge with these funds is that all these funds are conventional in the sense that they invest in disregard of Islamic principles on investment or Sharia compliance, which is you should not invest in riba instruments, interest-bearing instruments. So you'll find like Umoja fund partly invest in equities at Dar es Salaam Stock Exchange, and those equities could be of a conventional bank, buying share of Dar es Salaam Commercial Bank PLC, which is a conventional bank, or any other type of bank. And part of it they invest on treasury bills of the government. Now for us as a Muslim, that is problematic because it is, all these instruments are interest-based. So I can't take my 10,000 US dollars and invest it there because of that investment avenue, which is contrary to my faith. So we have a challenge here, we have a challenge in Kenya, we have a challenge in Uganda. And of course this challenge spread even in other countries. Nigeria facing the same challenges, and other, even in Middle Eastern countries. So good enough, scholars have deliberated, studied these funds, and were able to come up with alternative ways that is Sharia compliant, which is what is called Islamic funds. These are investment avenue, these are funds that mobilize money from the public or interested investors and invest them in Sharia compliant avenues. It could still be in stock, but in those companies at the Dar es Salaam Stock Exchange which are operating in a sector which is Sharia compliant. So that is the meaning of Islamic funds in short. There are various types of funds, Islamic funds. One could be Islamic equity fund. And this equity fund is largely investing in joint stock companies which are listed. Another type is Islamic commodity fund. These are funds which are investing in commodities. Could be agricultural commodities or minerals, the likes of gold, tanzanite, and so on. So they mobilize the funds and they buy commodities, fast-moving commodities, and resell it at a profit. And it is that profit which now grows the fund, and the income generated from those sales are shared to the investors. Other type of funds are mixed funds, in which they invest in various avenues, equities, commodities, etc. Another type of fund is money market fund. Now these money market funds, which are quite common in Tanzania, in Kenya, there's so many of them. They're largely investing in fixed deposits of commercial banks, and largely invest as well in treasury bills, treasury bonds. So an Islamic one, an Islamic money market fund, will largely invest through or put these funds to the Islamic banks which are there, if they are there. We are lucky here, we have few. In Kenya we have 3 Islamic fully fledged banks and several windows, like 6 windows. So they can keep on investing through term deposit or fixed deposit within these banks. And if the regulators allows, they can go and invest outside in sukuks, Islamic bonds, among others. So those 3 are just a few to mention, but there are several funds. Funds sometimes are structured depending on the investment that they're going to focus on. For example, real estate investment trusts. These are largely for investing in the real sector, real estates, houses, building houses or building flats, rent and sell and so on. The main objective of these funds is the same, either conventional or Islamic. The main objective of these funds are 3. 1, income generation. As I said, if you have a 10,000, and if you're a shrewd person, you have an option whether to consume, increase your lifestyle, or you can invest it and grow it. So you will look at where to invest that money. Some open business, and this has been the old kind of way of doing or dealing with funds. Somebody has the funds, he will want to establish a business, which is quite good. But that has been there for tradition, and it will continue. And that is perhaps most of us what we do. If we have some savings, okay, rather than, we don't know where to invest, so we open a business. Perhaps you go and farm or livestock or something else. But if you are not that capable to run this business, because not all of us can be able to manage businesses. We're not competent enough to run business. We don't have time to manage this business. This is where the Islamic funds becomes a very important instrument, because now, for those who are not comfortable or not well versed with running of businesses, they can have a place to put this 10,000 US dollar and see it grow, generate income out of it. So the first objective is basically generating income. Another objective is capital growth, and this is particularly on equities. Islamic equity funds, they aim at generating income as well as growing the value. When the company's value of shares grow, they also grow. So some investors would like to invest on the basis of capital growth. They want to invest in an Islamic fund so that the value of their shares can grow over time as the company performs. If it performs well, they gain, they have capital gain. If they perform worse, of course, you take a hit. You lose some money. Now, what are the Sharia principles governing Islamic funds? Number one is, of course, Sharia compliance. It has to comply with Islamic commercial law. And to make it simply, it means there should be no riba in that investment. There should be no interest in that investment. So an investment manager has to ensure he's not investing that money on riba or interest-bearing instruments. Another important principle is ethics. Another important principle is diversification. They have to diversify because of risk issues around investments. And of course, another one is Sharia governance. This is to say there should be competent people guiding this investment manager, monitoring him, and guide him to invest in a Sharia compliant manner or in Sharia compliant investments. This is where the role of Sharia scholars comes in, so that they can be able to guide the fund manager, monitor how the funds perform, and in case there is any income which is coming from investment which is not halal, then it is purified in a Sharia way, and so on. To conclude, challenges that is facing Islamic funds. Number one is investment avenue, which are Sharia compliant. Now, if you look at the Dar es Salaam Stock Exchange, how many companies which are there which are Sharia compliant and good performing? And they are performing well, because no investor wants to buy an equity, a share in a company that's not performing. Anywhere in the world, all investors would like to buy shares in a company that is, number one, well performing. For us Muslims, number two, Sharia compliant. It is business, the underlying business is Sharia compliant. In our markets, that is a little bit a challenge. There might be there, but now very few. Another challenge is competent investment managers. The challenge to have an investment manager who is well versed on, yes, he might be certified on investment aspect, also have this Sharia knowledge, having the ABCD of how to invest or to manage a fund in a Sharia compliant manner is a challenge. Coming from Kenya, I've seen this. We have in our Islamic banks what is called retirement funds. In Kenya, the modality of handling retirement is quite liberal, I would say. You are not all forced to go to NSSF like here or go to ZSSF like here, no. You can have your own set of retirement fund. You can set your own. A company sets its own retirement fund for its employees and gives another entity which are called fund managers. There are licensed fund managers to manage the fund. And there are custodians, which are now a bank apart from you to be a custodian. So we have one like that. And you find the investment manager is not, we have an Islamic investment policy which we have issued for him to follow. But since he doesn't know the rationale around not investing in riba and so on, sometimes when he sees an investment which has a good return, he puts the money there. So when we come and review and audit this fund and we see that income coming from non-halal investment, it becomes a loss to the employees who have put their money there, looking for a better retirement package. So competence on the side of investment managers is also sometimes an issue. Due to time, the last point I'll mention is sometimes the regulatory challenge. And this is one also we faced in Kenya. All retirement schemes in Kenya are under Retirement Benefits Authority, RBA. Just like here, all retirement funds, all social security funds here, which part of the products is pensions, they are under SSR, Social Security Regulatory Authority. Now these guys, regulatory authorities, one of the requirements is they are directing or they are forcing these funds, part of their money, to be invested in treasury bills and treasury bonds, because they have issued guidelines on areas of investment. A percentage to the treasury bills and bonds, a percentage to equities, a percentage to banks, a percentage, they have those allocations. So unless you have a regulator who is quite accommodating, you might not be able to comply with this regulation, because it requires a portion of these funds to go to the treasury bills, which you might not comply with that. And if you don't explain your story very well and get exemptions, you might suffer some consequences there. Now, as I said, that is the last point. So thank you so much, Mr. Chairman, for your patience with me, and thank you so much, the audience, for listening.